Ladies and gentlemen of the crypto space, we're live on Wednesday, March 13th at 11:45 a.m. Bottom line is, Denkun is live today, and that is probably the biggest thing that's going to occur, at least today. But it's a very big thing that's going to carry over and linger and propagate and affect everything. Transaction fees are everything. Now, you could go far out into the future and talk about transaction volume from a meat space perspective, and when meat space and business start to consume these systems. But the most important thing is to really understand today. You can speculate in the future, but today matters the most. What can you do today? What can you learn today about these systems to take advantage of them, to consume them for the most potential? So, yes, today the vast majority of consumption is from a speculation perspective, and it is what it is. If you build a credit system and you build a foreign exchange system, which is also called an AMM, an automated market maker, or an exchange, or a DEX, people are going to use it. And that's the point. The point is that these systems are permissionless. There is no gatekeeper. There is no registration. You have an account, you have assets, you have funds for transaction fees. You can use these systems. And that means it's infrastructure. And that has always been my biggest observation. And it's exciting that these systems don't discriminate and they permit, they allow anyone to use it, just like a public road. You could say public transportation, but a road is probably the best thing. It's something that anyone could use without question, without permission. Okay, so volume is probably one of the biggest inspections of a market. And I say a market, you have to think in terms of nation states. And that is probably the biggest observation from a forward looking speculative perspective. Markets have flows, they have cross border flows. Flows are capital moving from one market to another. Psychologically, why does flows go from one market to another? Opportunity, one. Two, decreased frictions, favorable transaction fees to engage in whatever kind of financial activity is desired. And that's arbitrage. It's fee arbitrage, it's interest rate with regard to credit arbitrage, and there's no regulatory arbitrage in the crypto markets. Not really geographic arbitrage. There's risk arbitrage from a crypto market standpoint. So that is a consideration to a degree. In that regard, you're sticking to Ethereum mainnet versus any of the L2s. It's a Chris Black type conversation, but that's not something that I concern myself with too much. So, what is the most interesting inspection with regard to the potential for volume? Cash. How much cash there is? Cold, hard cash. And what cold, hard cash is evolving, as we've talked about a lot, and we will continue to talk about a lot. And in this world, in this market, cash is stable coins. Oh, it's a cash. It's a type of cash. There's plenty of types of cash. Stablecoins are a type of cash. So we could look to the stable section of DeFi Llama to inspect where the cash is. And the title of the stream is volume. So that's significant to understand what businesses in what market are receiving attention and consumption. And that points us to the most important word with regard to the exercise that we do, opportunity. Where are the biggest opportunities? Now, opportunities are a loaded word. Uh, there is no guarantees with opportunities. There's just rationale and logic that go into attempting to capitalize on an opportunity. And then you get into the concepts of diversification, and you want to expose yourself to several opportunities, hoping that one opportunity does well, maybe does better than you thought it would do. And that's a portfolio. And that results in the composition of a portfolio. What kind of exposure do you have? Do you have exposure to opportunity in a particular market? And that's important. That's an important composition consideration. You want exposure to markets that offer clearly credit arbitrage opportunity, regulatory arbitrage opportunity, and geographic arbitrage opportunity, in which case the crypto space is the most epic geographic arbitrage opportunity. Isn't that obvious at this point? It's the cloud of the financial system, accessible from all nation states of no specific nation state. So volume is a big deal. And in this regard, you could talk in terms of exchanges and owning exchanges. Exchanges are businesses, and these businesses produce or cost transaction fees to engage with them. And that's a revenue for that business. And a lot of the exchanges distribute that revenue. And that's akin to a business taking in X amount of income on a weekly basis. And where does that income go? Does it go to accounts receivables in the accounting department? And does it get distributed as salaries for potentially a bloated workforce, a bloated human resources department? Does it get overly allocated to executives and middle management? Not in the crypto space. So that's why I very much look to exchange businesses as one of the greatest opportunity in the crypto markets that I could rationally observe. This is unlike anything that you could potentially own in equity markets. So in that regard, we're looking at the DEX's volume on DeFi Llama. The single page lists businesses. These businesses have a product. They facilitate foreign exchange. To engage in foreign exchange, people have to pay. They pay transaction fees using varying currency denominations. Predominant, well, not predominantly. You go onto the Cosmos hubs, and you got various gas coins, and on Ethereum L2s, it's Ethereum or an LSD or whatever the deposit variant on the L2. It's not raw Ethereum as if it was on Ethereum mainnet, but point being, it costs a fee in a respective denomination. So these are all businesses, and that just tickles me pink because folks often don't talk about the crypto space in terms of what really matters. They talk about this magical, mystical land of coins and memes like it's not finance, but it is finance, and these are businesses, and you are a business owner if you literally own these things. You don't own coins. And coins kind of have attributes of shares of equity, but they also have attributes of currency. They also have degrees of moneyness. They also offer yield and dividends, but it's not what was built. It's not those things. It's more because these instruments offer all of these things. It's something new. It's something interesting, exciting, and innovative and iterative. And that all screams opportunity. I noticed looking at the DEX's page that Uniswap isn't listed anymore. Uniswap is an interesting beast. And I think it clouds the space really inspecting where the opportunity is, because the opportunity isn't with the uni coin. As we see, it's just not on the radar as something that's investable. I say investment because there's a difference between investment and capitalizing from a capital gains perspective. A trader. Traders don't invest, they capitalize. It's a predatorial type activity, and that's fine, and that's not the point of the stream. So Uniswap, I don't see on the list. which is interesting. And I think that really clouds the opportunity inspection process. Now, Uniswap is really evolving. It's changing. It's becoming one, not what it was, and it's not really what these things are. And I think it's really becoming a meta aggregator. It's kind of, you remember 1inch had Mooney swap, which is they were using it for LP deposits. So I think Uniswap is really becoming a meta aggregator that also has deposit capability. And I could imagine from a governance perspective and whatever their board, they literally have a board, foundation, and whatever's going on there from a business making decision process. I think they're thinking in terms of products of what to build. Very much a meat space oriented decision making process, which is interesting. And Uniswap is certainly something to understand and process and digest what the hell was built and what it's evolving into. It's so much in the same category as like a 1inch. It's been corporate captured, and that's in good part why it's just there's no opportunity for us relatively small persons, and that is, I think, at this point in my mind, a very conclusive statement. There's just nothing there, and that's fine. Because the most important thing to understand is how to eliminate potential opportunities. You can't isolate a concentrated portfolio if you can't consolidate a very nice set of good shit to own. 'Cause you can't own all of it, and therefore you have to own the best of the things that you've observed will give you the best potential. So, Pancake Swap, I for a long time neglected Binance Smart Chain, and sure, to some degree, it's biting me because I would have liked to have a Athena position, but it is what it is. Can't roll back the clock. You can't force a position, and if you can't buy at a discounted price, you neglect it, and that's okay. You move on. There's always another opportunity. So you're going to have a variety of emotional responses watching the chart getting away from you. That said, you move on. And this is one of the most important emotional things to learn. There's I'm not. I am not, because I want to buy it when it's cheap. And it doesn't mean somehow miraculously waiting for it to be cheap or buying the dip type mentality. It means it's now no longer investable according to my investment criteria. I cannot own this business at the price point I want to own it at. It's up 5x, and great, what we do? It's at 15 mil market cap. It could go 150, 1.5, and in 10 years' time, it could be billions of dollars of market cap. Great. So, what do you think is going to happen to the entire space? The entire space is going to run multiples. And this is why I use this methodology I'm discussing as a criteria to invalidate opportunities. There'll always be another. And this, it's done for me. And that's okay. And there's a lot of things that are done for me. Now, I'll get to other protocols as we go down the list. But the most important thing is, where are the dollars? And to me, I use that as a way to invalidate shit to look at. And for me, heading into this cycle, I'm looking at Arbitrum and Solana. And that means I'm going to miss opportunities on Avalanche, on Phantom, on Polygon, on Binance Smart Chain. And I'm okay. I have to process that and respect that. And that allows me to have a concentrated portfolio where I have determined will be the best potential for performance, even though Thane is completely running away. And that's okay. So if we isolate to an Arbitrum perspective, uh, it's pretty clear what is outperforming, and then the most next step is to isolate or refine that list even further. Hash flow has been interesting. It's been on something that's done very well. It's something that I've thought about, but in any case, clearly Camelot is the dominant exchange. On Arbitrum, it's been so for a long time, but things have been changing. Now, Ramsey's is above Trader Joe. Today, it's above GMX. And there's something that stands out very meaningfully. Volume to TVL compared to market cap. Volume to TVL compared to market cap. And to me, that's something that indicates potentially significant mispricing. Where's Solidly? So Solidly has improved tech on top of Ramsey's, but it has failed to materialize attention. And that does not diminish its capacity to eventually do something, but we can only speculate so far. And as I said earlier in the stream, the most important thing is what is right now. And if you respect that observation, your portfolio will appreciate it. You can only speculate so far without, as some would say, become a bag holder or just you believe too much. It's like holding BCH and like Bitcoin Cash is going to overtake Bitcoin. As it's a whole 2017 type conversation, and that clearly never materialized. But there's still a lot of people that believe it. So you can only speculate so far, and you have to accept reality and respond to reality. And reality is that Ramsey's one has been moving up the list, and two, uh, uh, what is the competition? Trader Joe is meaningful because it's coming from Avalanche, and that's really interesting. Um, and Camelot's dominance is being chipped away at. Now, 2.78 volume to TVL. It's benefiting from the VE33 Andre code implementation. It has significant components, shares a lot of the functionality of Solidly's implementation, clearly from a volume to TVL perspective, 288, 278, very similar. I know Seraph has done optimizations, but whatever. This is what it is. Hash flow at 37.22 is something. I don't know what's going on there, but something to look into. Um, so this is what I've used to rationalize my ownership of this. And this is relatively new. This is probably one of the only things, the only businesses I acquired in 2024. Otherwise, it's been a very slow process. In 2023, we talked about that all year. It was like three different things. That was it. So be picky. Be very picky. Isn't that something like a father or a mother would say to their children? And in my case, my daughters. Be freaking picky. Be picky. So why don't you be picky with your portfolio? Be very, very picky. Take your time and be smart and then you in the end you have to respect what you bought, like, oh, this is a great idea. It makes sense. Now that's that. It's as simple as that. And that's was my rationale there. I am very interested in what Denkun does to volume. Now, there's been an inflow of capital across the space. It's been a positive sum environment. I mean, we literally spent 2022 and 2023 talking about the negative sum game, and that's not an environment to capitalize in or really consider trying to find a bottom in. And we finally saw the zero sum game, and then it flipped over to the positive sum environment, and now we're just positive sum across the board. It's 2024. Anyone who's not accepting that as a reality is not looking at the data, and don't be dissuaded or confused by social media about a lot of things and a lot of fear. You will see it in the data when the positive sum environment starts to subside, and it's not right now. It is a positive sum environment and nowhere near capitulation. There's $76 billion on Ethereum mainnet. The vast majority of the opportunity in the crypto space exists on Ethereum mainnet. Clearly, we just had a whole conversation about position sizing and discounts, and we've talked about discounts and premiums. So it's hard not to digress in my brain. But that is a good statement for now. $76.6 billion. That's a tremendous, monumental amount of money. Now, if we go back to all for the chart, we are nowhere near, well, we're near, but do you think we're going to stop at where we were in 2021 and where it ended in 2022? Is that what people think is going to play out with what's going to happen from a macroeconomic standpoint in 2024? The stuff that we discussed in 2022 and 2023 and why macroeconomics is such an important conversation. Do you think that this is where things settle and land as the norm with all the business innovation and all the technology and iteration that's occurred over the years? The space is going to expand multiples. You don't need to chase some shit that's going absolutely wild. If you miss something, you miss something. What matters is a solid, rational portfolio, and it's going to serve you well. This is just the beginning. Now, in Arbitrum, it's $2.5 billion. It's a microscopic emerging market. But what's notable about it, if you look at Binance Smart Chains, 4.7, that's a big deal. And I've invalidated as something to consider. I have no capital in Binance Smart Chain, so it is what it is. This is not a chain that I'll talk about, and that simplifies the conversation that I can have with you guys and have with myself. So next up, Arbitrum, $2.5 billion. What's the potential for transaction volume when transaction fees drop an order of magnitude? Goes up, inversely proportional. And what are the ways to capitalize on decreased transaction fees and increased transaction volume? Exchanges, foreign exchange businesses. Okay, great. So we're looking at data that supports the data that we were looking at on the volume screen, and that supports the conversation we had about the businesses and the potential those businesses have for us to capitalize. So this is called confluence. We look for data to support an argument or a thesis about what constitutes a good portfolio composition. Uh, Down the list it goes. So optimism was $686 million. So look, that's microscopic compared to Arbitrum, and it's nowhere even on the radar compared to Ethereum mainnet. It's just completely neglectable compared to the potential opportunities on Ethereum mainnet. Now, that doesn't mean you get the outliers. You always have something at the margins doing some wild shit. There's a lot of potential and optimism. Velodrome is a big deal, and there's the same team that did Aerodrome on base, and it's very exciting. And so, but how do you narrow down the list of stuff that you're going to consider? You have to find those things. And for me, optimism is something I really don't have much exposure to. And that's okay because I have full exposure to Ethereum L2s vis-a-vis Arbitrum. Great. Now, for many people, maybe they have a nice sized position in Velodrome that's done very well. Or maybe they got in early on Aerodrome because of the Velodrome position off of the airdrop. And clearly, Aerodrome has run multiples. Now, if you go over to base, it's microscopic, $314 million. Now, sure, you could speculate that this becomes a $3 billion market, a $30 billion market because of the Coinbase relationship. Okay, cool. That's not something I want to do. I want to base my activity and my thought processes on what's going on today. And what's going on today is that Arbitrum is significantly outperforming and provides much more opportunity compared to anything else other than Solana. Solana has $2.5 billion worth of stablecoins, dollars, units of account. And what happens when units of account get bored or sit idle? They get deployed. This is the liquidity. This is the lubrication. This is the fuel for financial activity, units of account. This is one of the biggest observations you can have in crypto markets if you want to think from a macroeconomic standpoint of where activity will be. What is outperforming will continue to outperform. Outperformance begets outperformance. Price going up causes the price to go up. So a lot of these themes carry over to different inspections of the market. Solana, I neglect from a meme coin standpoint, and that's okay. I have my exposure, and it's important and a hard exercise to be able to focus your mind on being contained. There's a lot of stuff going on over there. You can make a lot of money from the meme coins. You can also lose a fortune. That's another story. Uh, but I'm very excited for Solana. I have full exposure to Solana vis-a-vis my hero ownership, and that is something I am comfortable with. I don't need to own Sol, and probably is going to run another 10x from here, and I don't need to own it, and that's okay. Your portfolio is going to do what it is going to do, not because of what you want it to do. And when you want it to do something, that's when you get into trouble. That's when you start chasing things that have already moved. And that's when you start buying things that have run up and they get sold down. You didn't get a good price point. You didn't get a discount. Very excited for Solana's activity. It has a huge amount of stable coins. Arbitrum and Solana are what I primarily look at. You could go over to Sui. You could go over to Kava. I generally lump Cosmos hubs into the Cosmos conversation. And I'm not going to digress too much. I have a high opinion of what's going on Cosmos, a network of networks. And I have my full exposure to everything and anything that could potentially occur on Cosmos, vis-a-vis Atom, vis-a-vis Osmo, and vis-a-vis Dimension. And I wish I had my exposure from Celestia, but I do not, and that's okay. Last thing I'm going to do is buy it at its price point right now. And I wish I had the airdrop, and I could wish all I want, and it's not going to change reality, and I'm not going to chase it, and that's okay. It's okay not to own something that's awesome. Always remember that. So that's really what's playing out. Polkadot's not on the radar. Check back in 27, 28, 31, 32 type stuff. Check back in the next 8 years, 4 years, maybe get some good positions, and in 8 years, I expect it to really start to do something interesting. Notice how I'm talking in these large time frames. Um, let's hit some comments. I mean, it's just very interesting what's going on from a stablecoin perspective. On let's look at Solana for volume. It's because of the transaction fees. That volume is crazy, and that's all meme coins because there's not a lot of infrastructure. Solana's gonna, I mean, Hero is just a perfect exposure to Solana and all the perps and all the shit that Hero is gonna perform or produce from a federation perspective. I don't need anything else. This is all 2.5 billion. That's crazy. It's massive daily volume. It might be one of the largest daily volume other than mainnet. That's exciting. I'm very excited for Solana. I don't care about the volume associated with meme coins, but surely the transaction fees are quite interesting, and I look forward to Hero becoming not mispriced and the fees to start flowing. The second you put 20 to 30% in front of a deposit where you're going to earn 20 to 30%, it changes the entire equation. And that is what starts the flow of capital and changes everything about circulating narratives. Very exciting. 1.67. I mean, literally, it's doing more than mainnet. I correct that statement. That's crazy. That's because of transaction fees. It's very expensive to operate a mainnet. 20, 30, 40, 50, $100. At 100 Gwei, it's 101 Gwei right now. It's probably $100+ to do a variety of transactions. And bear in mind, the most opportunity is there because that's where money is most comfortable. and where money is most comfortable, $70+ billion, they don't give a shit about $100 transactions. If I'm doing a 20, 30, 40, $50,000 transaction, I don't care about $100 transaction. So these transaction fees do not inhibit activity uh, because the transaction fee does not scale with the size of the transaction. So and that's why it's a big thing to have exposure to the other chains that offer favorable transaction fees, because that's where activity will occur for the smaller transactions. And I've isolated that list based on the conversation we've had thus far. Arbitrum and Solana are my picks as fastest horses. Let's see where Polygon's at. 52 million volume. It's quiet. It's relatively quiet. And let's look at stablecoins for Polygon. $1.4 billion reminds me of Avalanche, 1.3. I mean, Avalanche, the Trader Joe is an incredible place from a concentrated liquidity perspective. The meme coin activity on Trader Joe, literally Trader Joe dominates Avalanche. It's one of the few networks where there's complete dominance from an exchange perspective. Nothing else comes close. And that means all the meme coin activity is going through Trader Joe. That means you have a concentrated liquidity position. You know, you can print 20% in a day. So that's interesting. But you also have to be comfortable with that kind of activity and don't chase. So, things to consider. Um, Polygon is there on the list. So Polygon, Avalanche. So from a stablecoin perspective, clearly it's Arbitrum, and this is the list. I think this is actually liquidity depth sorted. Tron, whole other story. BSC, Arbitrum, Solana, Polygon, Avalanche, and it's down the list. That's a nice ordering. I wish I had a little bit more exposure to Avalanche, and that's okay. I wish I had more exposure to Polygon, and that's okay. Can't own everything, and in that regard, Arbitrum and Solana are where my attention is. Let's go back to fees, volume, and we'll hold up Avalanche because that's what I think is next in line for activity as transaction fees collapse because of Denkun. It's right here. This is where the most interesting stuff is probably going to occur. Not here. Here. Volume. And I'll keep this up and let's go through some comments. Let's keep it going. Noah, my guy, I thought a concept in the house. Pancake swap volume is up bigly. Muscle memory kicking in for many. Sure, that's great. That's exciting. And then I would love to have some stuff, and that's okay. Yeah, it's a big deal. So, is anyone on social media in a position to say there's not an endless amount of money to be made in these markets? It's opportunity overload, ladies and gentlemen. The whole question is, can you engage with it sustainably? When the market rolls over, whatever it does, if you have a liquidity event between now and 2025, or when the market rolls over sometime at the end of 2025, what are you going to keep? So that's why this entire conversation we talk about is sustainable methodologies, defining rules and ways to inspect this space to create a portfolio that's resilient, that will work. A portfolio that works during a bear market? What's the goal? And the goal, define your goals, define your expectations, and set reasonable expectations. I say all the time, I do not have an expectation to make as much money as possible. I have a risk adjusted expectation. My expectation is to make as much money as possible following my rules because I can be consistent with my rules. Juggy in the house, much pleasure. Gazika, early stream cap, yes indeed. Good morning, Nexus. Yo, 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 Tapsy's in the house. Sergio, this takes me back to daily bull streams in 2021. Tapsy, yeah, we have nostalgia. A lot of folks in here hanging out for all these years, and Quotable Crypto. I put that in my highlights for the profile on X. It's a hell of a nostalgic set of quotes that he put into that thread. So that's very exciting, very interesting. I very much appreciate that thread of quotes. We've been through a lot, and our narrative and our story has evolved significantly. It is much more rigorous at this point. And it's interesting to think back into like late 21, 22 as these types of ideas were starting to form and how we got from where we were to where we are. And that's something everyone should do. Introspection. Who are you? What do you want to be? What do you want to do? And that's a very simple thing for me to answer. I want to trade work for clicking a button. I mean, it's what I want to do. Instead of working, I want to click a button. And that, is that bad? Is it realistic? Interestingly, it's certainly not bad, and that means I need to buy the right things. It's consistent with how the rich think, and I found that Michael Saylor commentary, especially a lot of the later parts of that stream, very interesting. And the rich don't own cash. Cash. They don't own currency. The rich don't own currency. They don't give a shit about a bank account because at the end of the week they're getting a deposit. It's all transitory. It's all meant to be used. What matters is owning property. And property is a broad definition that encompasses business. And good property is business that's cash flow positive. And you can denominate all you want, and you can be a forex trader all you want and swap your denomination of your cash position. That's great and fine and dandy. But the biggest thing is when I hear Michael Saylor, I hear business. And I'm sure if we had a conversation, he would completely agree with me, especially when I start to talk about respecting portfolio size. For his portfolio size, everything he does is a no-brainer. For early Bitcoin folks, it is very easy for me to understand being a Bitcoin maximalist. Because at some point, you don't have to give a shit about business with what Bitcoin's doing. And it's very, very easy for me to see them advocating for Bitcoin only because they have historic bias. Because they had $1,000 worth of Bitcoin that's now worth $30 million. Don't chase the dragon. It's a little different nowadays. And that is what I observe. That is what I inspect. How can you make it nowadays? What opportunities exist nowadays? And Bitcoin is not going to get you to where you want to be. Very interesting position, those original Bitcoin maxis, that you don't even have to own business. Get a 70% drawdown in Bitcoin, and you go from after a bull run in Bitcoin at 10x. Your 30 mil turns into 300 mil, crashes to 100 mil. Oh, the horror! You know, there's no claim button when you have that much value. It's just literally selling a portion cycle after cycle because you get in those multiples. So it's a whole different equation depending on how much capital you have, your portfolio size. It's one of the most important things I try and encourage folks to do is you got to respect the portfolio size. And it's complicated the smaller the portfolio. And it changes as your portfolio gets bigger. And there's always a threshold where the portfolio gets big enough that it gets weird. And you might not understand what certain people say and where they're coming from. It's an exercise I've been doing a lot lately, trying to project and really appreciate the mindset of different persons that have different portfolio constructs, different compositions of their portfolio, and different total net worth, so to speak. It's very critical to be respectful of that and to understand it. And then and only then can you respect your portfolio size and your rules of how you need to craft your portfolio considering how much capital you have available. Tapsy, happy 20,000. 20,000 subscribers on X. That is a fascinating achievement for the way we talk, what we talk about, how we talk. I'm I'm not the most digestible person. I'm certainly consistent, very consistent with the way I think and the ideas that I share. But a lot of people don't understand me, and a lot of people don't want to understand me, and that's okay. And I'm grateful to you folks at 20,000 subscribers, because I truly believe that what has worked well for me can work well for other people, and it's not supposed to be easy. If it was easy, everyone would have money, and if everyone had money, no one has money. That's a whole macroeconomic conversation about what is money and why the wealthy are always a minority. And that's just historic reality. Sergio, present and accounted for. Um, Denkun Day, Juggy, that's right. As I'm going down the list, everyone please throw your comments in. I know on X there's no way to comment, but if you go on YouTube, you can post anything you want. I'm happy to talk about anything. MF Income, good morning. Who is seeing in the house? Leandro Helicap, what do you think is a minimum reasonable allocation to RAM for a small portfolio with an 8-year expectation for wake up money flow? Okay, so this is a lot of points you talk about. 8-year expectation. In 8 years' time, the world's going to be a different place. In 8 years' time, uh, these markets are going to run multiple cycles. The global financial system is going to expand probably in order of magnitude. Um, and when I hear the word expectation in the comment, it's probably from a liquidation standpoint. And I think that's a non-starter from a mentality. It's not about you want to how do you manage business? A business you sell when it's no longer performing well. And this is like a Buffett type mentality. You rotate a business when the entire sector is decelerating, and you want to take the capital, liquidate the capital, and allocate to another sector. I don't think of businesses like that. This is going to be a sector of global financial economics that's just going to continue to expand. I'm sure from an 8-year perspective, we'll have to reevaluate in 8 years and 2 cycles from now, but clearly it's going to expand. Global financials is going nowhere, and all of this is a manifestation of global financials. It is global financials. It's not separate from, it's not the crypto markets, the magical, mystical, mythical crypto markets that everyone talks about. This is a financial market, period. So what I want is to own these things that produce cash flow. So RAM is a good speculative position, as I've broken down quantitatively thus far in this stream, and even in broader context. Curious to see what Arbitrum does, how it fits into the big picture. And what matters is cash flow. If you're able to produce enough cash flow and cash X, Y, and Z, you have to be considerate of your portfolio size. X, Y, and Z means how much does it cost? How much does it pay you? And how likely is it to continue to pay you into the future? This is why Michael Saylor gets it so well in that conversation he had yesterday. You get the cash flow from the business, cash flow. You can vary the denomination of the cash, great. Respect Forex cycles, the currency expansion cycle, which is remarkably cyclical at this point, with 4-year intervals. And the whole point of cash is to consume it for consumables, consumer staples, food, shelter, so on and so forth, healthcare, and to acquire business. What do you spend money on? To buy business, to produce more cash flow. And that's the rational way to compound. And you buy a business when it's discounted and mispriced. So that brings up a whole conversation about, like, you got to go into the bear market with an adequate amount of cash, and you got to vary the cash denomination to protect the value heading into the bear market so you can buy business, so on and so forth. Anyway, so minimum reasonable allocation. X, Y, and Z. How much does it cost? How much is it paying? And what's the likelihood it's going to continue to pay? Clearly, if you have $1,000 portfolio, you're not going to get paid much at all. And this is very geographically sensitive because if you have $100,000 portfolio and you're going to get paid $20,000 a year, $20,000 a year changes everything in a lot of countries around the world. So how do you get $100,000? That's another conversation. But the geographic sensitivity of that question is quite meaningful. In the United States, 20 grand, 20% on 100 grand, 20% APR. One is a 5-year ROI, which is very interesting. And two, it starts to change things, especially if that 20 grand, 20% APR off 100 grand principal is only a portion of the portfolio because you want to continue to consume and acquire businesses. And you will do that with a cash flow like that. It's a very meaningful cash flow. And you want to consume and acquire additional businesses at opportune price points at discounts, of which is very sparse in the markets right now. So I don't think there's great prices. There's certainly not at discounts. Everything is off bottom. Um, so in that regard, we could take a look at the Ramsey's chart for the fundamental. Clearly, Thana is not at a discount, less than a penny, up to 57 cents. No, I mean, sorry, it's not less than a penny. It's up 6, 7, 8x on the money. All right, it's a complicated equation. Anyway, Ram, what I love is the market cap. I still think it's quite remarkably mispriced. I mean, look at the volume that's going on today. It's nipping at the heels of Camelot, and there's no attention on it. That could mean one of two things. It could mean it turns out to be not an opportunity, and I'm dead wrong, or it could be completely mispriced. And as such, opportunities tend to be that kind of binary reality. You're either right or wrong. And with a locked position, you don't have the luxury of being wrong and liquidating. So that's a risk component of the calculation of whether it's something you want to acquire. It is what it is. I have my position size because it's a particular percent of the portfolio. It was purchased using cash flow. It's not the entirety of my cash flow, so watch out with excessive concentration. This is clearly not the only thing you want to own. This is a gamble, a speculation. So never put all eggs in one basket. And that's the whole conversation of excess diversification. Never go all in, never spread too thin. The holistic composition of the portfolio is very meaningful. You want to own very concentrated bets, but you can't just own concentrated bets. You want to risk adjust those bet sizes. I hope that helps. There's no simple answer, Leandro, for that question. In many regards, it's very subjective. It depends also on your expectations, what you want to achieve, hopes and dreams. And it needs to be respectful of your portfolio, income, work, and then the realities of today. Respect today. Matt Blaine, hey yo, oh, I am your age, Leandro. Yeah, we're in the 40s. That's a big deal. That's a big deal. 40s have different consideration than certainly 20s. You're in your 20s and you nailed. You got in 2023 or late 2022. Heaven's sake, uh, it's going to be a very interesting life, especially if you adopt a lot of the things we talk about. The equation changes for the 20s. I think between 40 and 60, the equation is about the same. But when you're in your 60s, it's a bit of a different equation with regard to risk exposure. Very interesting conversation. Always happy to have this conversation, but it's not so simple as what do you think is a minimum good position. But I hope our conversation thus far has helped. Have you thought more about what to do with your aura? Yeah, I hate 4-month locks. Produces great cash flow. I think it's going to run multiples just like the entire market. I think there will be exuberance. So clearly not now is even a consideration for liquidation. Well, because it's a 4-month lock, clearly liquidation is a consideration as compared to a 4-year lock. And that presents that kind of optionality, that choice. And that's not something that I like, but it's something I must respect and I must consider that. Listen, if it runs a 10x, I'm not going to not sell it at the end of the market sometime in 2025. It's not going to happen. I'm not going to give up those kinds of multiples. Um, but that's not right now. So as of right now, my sentiment is market's going to market and it's going to be very productive. Gabriel, hello, much a pleasure. Can also expect an RA airdrop on account of the RAM. Yeah, I'm okay. Fractal is a big conversation, and today is a big day. Fractal today, Denkun. Oh my God. So, interestingly enough, from a DeFi Llama perspective, we're not really talking about Fractal yet, and that's the spec side of the portfolio. I'm very interested in Fractal. If you go over here, you get a little bit of early data from a meme coin standpoint. There's no activity. It's off the radar. But what happens when, I mean, literally everyone's integrating. Frax is the center of the universe, aside from Curve, of these markets, and all the protocols know it. Stargate, Layer Zero's in. There's they're all going to be in. If Layer Zero responded as quickly as they did, that's a major systemic protocol. The smaller bridges will respond. This is going to be a major place to keep eyes on from a cross-border flows perspective. What flows in from a total stablecoin def? I mean, literally, Frax is a stablecoin printer, and this is an entire network built around the stablecoin printer, built around cash flow. I think between the point system and Curve's going to be there with gauges, and Ra's going to have gauges because that's what it does. It's the whole point we talked about Ramses and the potential opportunity there. The percentage signs that I think are going to be displayed on Fractal are going to be fantastic. I think and what drives activity and behavior and decisions and flows ultimately, opportunity, and how do you display opportunity numerically with percentage signs? Oh my goodness. I am very excited for the frenzy of activity that will be occurring because of the percentage signs get to display in the Fractal ecosystem. I have capital over on Fractal, and it's predominantly reserved right now for Raw. That's where my mind is at. I will want to own as much of it as I can. And that is a statement that you need to respect my perspective on when I say that. I want to own as much of it as I can. It doesn't mean the whole fucking portfolio. I have X amount of capital that I moved over to Fractal, and that's pretty much the only thing I want to own. I think it's going to be a big deal from a capitalizing on transaction fee perspective. Clearly don't need anything with regard to Curve. That's literally the primary position. So you really need to have a great backstory about my entire portfolio's composition to understand how I'm thinking of engaging with this market that's really yet to start firing on all cylinders. X amount of capital was allocated over there, and I'm predominantly wanting to see what kind of exposure I can get other than Curve, which I already have exposure to. I already have exposure to Frax. Those are my two primary positions in the entire portfolio. So let's see if a small allocation, relatively small allocation, to another exchange business that has a capacity to throw around a lot of percentage signs can be a productive component of the portfolio. A 10x on a portfolio component that's still producing 10, 15, 20, 30% APR, that changes everything. I've always said 1% to 10% changes everything. 1% to 10% where the cash flow is not inversely proportional to the appreciation really changes everything. If you're getting 20% on 10 grand, which goes to 20% on 100 grand, the entire equation changes. So to me, those are the biggest opportunities offered by the crypto market, that you don't have an inversely correlated cash flow to price point. And that is a very common correlation or inverse correlation in equities land. So it's not the norm. Uh, well, I don't think so, Matt Gabriel said, but I speculate that it is the case. Ra is the Ramses team, and they have hinted at it. So nothing's ever certain, but it's something that I think is reasonable. Um, yeah, so but what you're saying is reasonable too, Gabriel. You will farm RA by depositing TVL. But notice how it's an I think. There's a lot of I thinks. You don't know for certain until deployment, and that's why I mean, literally, Curve just launched Llama Land. Oh my God. There's so much shit that's going on. This is such an exciting market with deployments and opportunity. It's so remarkable. Um, uh, Back and forth on Raw. Arrow, easiest yet hardest thing to do is wait for prices to nuke 90% and buy next bear for the projects we missed or didn't get to buy enough of. Yeah, but my man, we are so prepared this time. So prepared. We're going to be following the macroeconomics. We're going to be following the bond market into, well, always, but especially when we start to see the exuberance. This market hasn't even started yet. I mean, look at DeFi Llama and the stable depth. This market hasn't even started yet. It's going to be such a good 2 years, and it's a whole nother thing. I get guilty. I get very guilty about doing so well when everyone else is doing shitty. That's a whole nother philosophical conversation. Um, but we're going to do that so well, Arrow. We're getting all this cash flow. We know we're not going to buy businesses that are at a bajillion% premium. So we're going to be accumulating this cash flow, and the cash flow hasn't even started, and we're going to change the denomination of the cash opportunistically. We are so prepared for 2026, Arrow. It's going to be really interesting, especially in Discord. Very excited. I really like Clio. For me, it's the best fork UXY. Sure, there's endless forks. Was there like 1,000 VE33 forks? How do you weed them out? How do you focus and peer through the bullshit? And that's why I look at the data. That's why I look at stablecoin depth. That's why I look at transaction volume. Mantle is off my radar. I know that's a very quick answer, but you just got to pass on things. Should pull up the hero dashboard. Volume fee starting to climb. James. Yeah, of course. So, that's the whole you're going to be wrong until you're proven right kind of thing. But wasn't that the speculation? Wasn't that obvious? That once the Federation gets cooking and PepperTex goes live, and then the 25 other protocols that are building on Hero go live, it's going to be one, a USDC printer, and two, it's going to be a Hero recycler, an HXRO, an ES HXRO recycler. Oh my! So that I think that expectation is going to become reality, and it's just a matter of time. Rupert's in the house. Much pleasure. The bad guy, the most rational group in the crypto space. Are we the only rational group in the crypto space? Sometimes it seems like that. DCA man, hi Noah. Would you have a playlist where we have videos to learn the most important things you have shared on this channel without having to watch each and every one of your previous videos? There's got to be like 600-700 videos at this point on YouTube. So no, I do not have a playlist. And two, I'm not fond too much of going into the past. The best ideas are here and now. The best capacity for me to express those ideas are going forward. So the best place is maybe from a high level, skim some old content, look over the quotable crypto tweet thread. There's a lot of good distilled ideas, and ask questions. It all starts with questions, and we move forward, and we can't move back. So it's a whole nostalgia and regret type conversation. Reg, lots of protocols, especially in Arbitrum, are trading at 10% of their TVL as compared to market cap. Their TVLs are spilling above all-time highs while their token price trades at all-time lows. You said asymmetrical. I call that mispriced. So a result of mispricing is an asymmetrical appreciation to alleviate the mispricing. So what you said is a very rational observation, and that's something I appreciate very much. DCA man, I ask this as a person who recently discovered you and would like to learn the concepts you share about liquidity, credit, flows in a rational way. You probably want to turn the clock back to late 2022 and the 2023 streams. Literally, what else did we have to talk to in 2023 other than macroeconomics? I mean, literally, right now, we're not even discussing macroeconomics. We're talking about crypto. So 2023 was a lot of content about macroeconomics. When's the last time we literally, I guess on recent streams, we pulled up the move and the DXY and glimpsed over the bond market and national financial conditions index and looked at other liquidity indicators, but we don't really talk about that as primary content right now because we don't have to. Uh, and there'll be a point where we'll start to respecting it. Lodestar is a great example of that in Arbitrum. I'm sure there's always a lot of outliers at the margins of potential stuff, but DeFi Llama, it's not just massively helpful. It's literally the data. It's everything. Um, Price charts don't mean much. The most important thing you get from a price chart is whether you're buying at a premium or a discount. I mean, that's a very simple thing. Like, I understand folks want to buy something that's going to go up more, and that's important from a capital gain standpoint. You're looking at technical analysis, looking for breakouts, ascending triangles, falling wedges that break to the upside. Sure, from a trading perspective, that's critical. From an investing perspective, what I want is the cheapest price point. I'm not going to invest in something, buy a business after it's run 5x on the money. I'm not going to buy someone's 3x, 5x, 10x. I want to buy a business at a discount when it's mispriced, as Reg mentioned, something that will asymmetrically alleviate the mispricing. And if I cannot buy it at the opportune price, I won't, and I will wait. I will happily collect cash flow until the end of 25, and I will happily play FX and swap the cash to a favorable denomination, and I will happily wait till 2026, end of 2026, to buy a business at a good price point. And we have rules to how to identify a good business. Simple as that. I mean, it does sound simple. I mean, it really is as simple as that. The hardest thing is adhering to those specifications, those procedures. Speaks to your investment versus capital gains approach. I have engaged with capital gains just as much as everyone else, and but I want to. You need to manifest what you want to be. I like the way Buffett talks or his ideas up through his investment career. And it doesn't mean I'll ever come near what he's done, and that's not my expectation at all. I want to achieve the best of what I could achieve adhering to these rules, and I'm okay with that. I live with that, and I'm not disappointed. I'm excited because I think it's going to be very satisfying. And it's certainly an investment conversation we talk about nowadays, very much over anything close to capital gains. Are you ever concerned that buying in a bear and locking up for 4 years may put you in the middle of a bear when it unlocks? Well, I don't intend to unlock many things. That's why I mentioned earlier with Aura that I dislike 4-month locks. What I want It changes the equation when you have 4-year locks because that means everyone else is dealing with this reality. And I think it changes the the business and it changes the whole market. It changes the way people look at this business. I think this is all very new. All of this didn't exist prior to 2020. And we're all still trying to digest what the hell was built. And there's no precedence for a 4-year deterministic lock. I expect the majority of persons that have the cojones to lock for 4 years to never, ever, ever, ever want to unlock. And they think of it as a purchase, not a position. They re up their locks periodically and they want the cash flow because that's what an investor would want to do that owns a business. And that happens to be what I want to do. So I think a lot of people, at least the large actors, the ones that are, and that's what I want to align with. I want to align with the large actors, even if I'm smaller. Sure, I'm larger than many, but I'm certainly not the biggest ones. And, like a tetranote or someone who's 10 times larger than a tetranote. But those who are the actors that I want to align with. Not do what they do. I'm going to do what I do, but I understand and I project and understand why they're doing what they're doing. And in the end, they want to own businesses too, because that's what Michael Serra was talking about. The rich don't accumulate currency. They own property, and business is a type of property that pays you. DCA, okay, thank you for the tip, sir. We'll check out all the 2023 vids. Skim through them. The titles aren't necessarily most expressive of everything we talk about. I mean, literally today's title of the stream is transaction volume, and look at the entire conversation, the whole conversation we've had. So it's hard to find content. It's a bit of a treasure trove of sorts. How bullish are you about Curve Future, considering that now have the DEX part, stablecoin part, and from now on the lending part? What would be lacking? There's a reason it's the core of my portfolio, and I think this space runs multiples. It runs multiples this cycle, it runs multiples in the years to come, and I think there will be a lot of successful businesses, financial businesses, that come from this space. Credit and foreign exchange businesses, and clearly all the derivative shit, but I'm more interested in credit and foreign exchange. There really is no other type of product. That's the complete reductionist perspective on what this space offers: credit and foreign exchange. And I can't think of a better credit product than CRVUSD. The liquidation engine, the reflexive interest rates, it is it stands apart. I'm not fond of the redemption model. Why? Because it's rigid. I'm not fond of a rigid threshold for redemption. What I'm fond of is a dynamic, adaptive policy. And then what takes it to a whole nother level is how the protocol is deployed. It's deployed immutably. So it's literally a deterministic set of rules that's immutable. It cannot be changed, yet it's adaptive. And I think that changes everything. And I don't mean that from a crypto standpoint. I mean that from literally a financial standpoint. It's everything that we hate about the Fed. It's everything we hate about global financials. What are they doing? What are they thinking? Are they going to cut interest rates? Are they going to raise interest rates? And is the Treasury going to borrow a shitload of money? There's no determinism. There's no predictability. There's no consistency, expectation. It's all reading the tea leaves. And that to me sounds stupid from a global financial perspective. What makes sense is some rules, and not a court that's going to say, "Oh yeah, the rules, they don't the bankruptcy, just figure it out, come up with some new terms, an intervention." I mean, literally, that's what everyone hates about global financials right now is all the intervention. But if it's immutable and deterministic, it's going to behave in the future the way it behaves today. And to me, that changes everything. Diego, you're late, but there's never too late. Welcome. Halusi and Curve Eco coins have been lagging, given extra time to accumulate. Is it wrong to be accumulating tokens now like Convex and Prisma rather than flipping these stable, switch and accumulate FX reserves? It depends on your expectations and your goals. I mean, clearly there's a whole meme coin frenzy. And the same thing every cycle. Someone's turning $1,000 into $1 million, and it depends on what you want to do and what kind of activity you want to engage in. And and you don't have to do anything. Emotions are such a burden. If you see someone else make money, a lot of everyone, including myself, it's like, I want to make that money. How do I make that money? Why can't I do what they're doing? This is the boundary and the burden of not just the crypto markets, but financial management in general. You got to overcome those thoughts and those emotions. And that's the only way you find peace and comfort. You have to set reasonable expectations. And as long as you meet those expectations, you will be satisfied. And if you don't meet those expectations, you will be dissatisfied. So set reasonable expectations. It's all psychology. So you don't have to do all the shit that everyone else is doing. And I look at the meme coins and I'm like, all right, I just want the transaction fees. You all can fuck off and do whatever you want with your meme coins as long as you're paying me on a weekly basis. And that's cool. And I'm well positioned for that in the coming decade. Expand the damn time frame, everyone. Um, but I mean, you can look at the price points. I mean, Curve is up over 100% from bottom. That's a big deal. It means 100% is a big deal. It means if you have X amount of dollars, you can now buy less than half of what you could have bought. So what's the next cyclical low? I would say the next cyclical low, like structural low, is higher than 40 cents. It's a pretty reasonable statement, which means it might still be a good price. You'll only ever know the answer to that in hindsight. So that's why it's not easy choices and it's hard choices, and we have to live with our choices. Do you use some perp and leverage positions? Never, ever, 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 ever. No interest. I provide liquidity at times, and I end up just, if I capitalize, I capitalize. Play a meme coin, you get a couple of bucks, whatever. It's not a big deal, but it's not something that I engage with, consistently. I strongly encourage myself not to do those types of activities. And I'm looking for opportunity. I'm looking for mispriced assets, and that's why recently, and folks know in the forum, and my with regard to Ramses, and my tone has changed with it because now there's a lot of arguments that are supporting the things that I say. It makes sense to me, and it's not as simple as that for everyone, but you all have to find what makes sense to you. Because in the end, you will all have to live with your choices and decisions. Um, Arbitrum fees are absolutely insane right now, and we're not even at peak bull. Ramsey's going to print like crazy. That's an interesting thought. I mean, we did look at some data that indicates that is a likelihood, particularly the volume nipping at the heels of Camelot, the amount of stable coins that are on the network, a collapse of transaction fees in order of magnitude. What's outperforming continues to outperform, meaning the amount of stablecoins on Arbitrum are there for a reason as compared to Optimism. It's more stablecoins as compared to Avalanche and Polygon. They're there for a reason. So seems pretty interesting. And that's called confluence that supports an argument. As you said, we don't know if they will up or down the interest rate, but I think they are pretty sure the inflation will stay and keep going up. Tea leaves, tea leaves. It's not deterministic, up or down. Inflation. I'm not getting into it. That's a whole macroeconomic conversation. We've talked about it a lot. What is inflation? And one brief statement I'll make on it is inflation is relative. There's consumer price inflation. There's currency inflation. There's, I don't know, everything. If inflating means going up, deflating means going down. If the price of food is going up, there's food inflation. If the amount of currency is going up, there's currency inflation. All it means is up and down. There's no such thing as inflation. Unto itself is a nothing. Is it an adjective? It's describing a thing. But the thing is price. So just get granular and peer through the shit that you hear on social media. Oh, the inflation. But there's no such thing as inflation. It's going up and going down. Prices going up and going down. And what prices? The prices of different things. So in that world, there's forces, and that's why we talked about 2022 and 2023 so much about macroeconomics and all these forces to understand what's pushing and pulling things. And that leads you into really like capital flows, cross-border flows. What drives capital from one market to another? That's literally why we're talking about stablecoins, the amount of capital in a market. And we want to understand why there's an amount of capital in a market and what will drive capital from mainnet to Arbitrum versus Polygon versus Avalanche versus Phantom. What drives flows? What drives behavior? The biggest thing that drives behavior is percentage signs and opportunity. If shit's going up in price, one, that'll drive capital flows. And two, if there's 1,000% in front of an APR, that's going to drive capital flows also. Psychology. With that in mind, what do you think about getting an exposure to crops? Underperformance, generally. I think there's a big opportunity to spread meat space percentages throughout the system as a form of collateral, like crops, rental, commercial real estate, residential real estate. All right, fine, tokenize it and throw those 5%ers around, and folks will leverage the shit out of them. And that's what they always do. And as long as I get the liquidations and as long as I get those transaction fees, they can have at it and do what they want with that collateral that's spreading yet another cash flow, a percentage sign through the system. Generally, what I think about it. Let's wrap it up for today. I appreciate all of you. Thank you all for joining. Wednesday, March 13th at 1:02 p.m. Tell everyone to subscribe. This is the best time of the day. I appreciate all of you. Link in the description for Discord, the most rational community in the entire crypto space. It's only Wednesday. I'll see you guys on Friday. Don't fear, we'll be back. Y'all stay calm on Denkun Day, and I will see you later this week. Peace.